Dear professional friends, welcome to second episode of weekly GST update. We are excited to see your response to our first episode. Thanks for the same. During this week, we do not have any new circular notification or clarification issued by the department between first episode and this episode. Before we end, we will take up all the queries, questions received by us during this period of 1 week. Let's begin with the critical case laws that are important for you, your client, and for your business. Case 1. In the case of ISA Exim versus Union of India and others, reported in NTN 2024 volume 84 at page number 210. Ruling passed in case of petitioner itself is binding on the department even though appeal has been dismissed by the Supreme Court against the order passed by said state in case of another SSE. This case established the binding force of advance ruling and it relates to Customs Act. The decision of State Chennai branch in another case of ST Enterprises and Ayush Business Overseas certainly cannot be a binding precedent on High Court, nor can it be binding on all the other authorities or accessories throughout the country. The decision of Chennai branch of State is binding inter se between the parties before the tribunal and not the petitioner or the authorities having the jurisdiction over the petitioner. It is also important to note that the decision of AAR dated 31st March 27 in case of petitioner's own case was not challenged by the respondent before the higher forum. The respondent did not make any attempt for review of the said ruling by filing an application before AAR, which was dismissed on 31st March 22, wherein the respondent have once again raised an issue of classification. The said rejection by AAR dated 31st March 22 was also not challenged before higher forum. It was important to note that the rejection was on 31st March 22, which is post the decision of State Chennai in case of ST Enterprises, and also dismissal of the appeal by the Supreme Court in case of Ayush Business Overseas, which was dated 26th February and 19th March respectively. Therefore, the respondent have accepted the ruling in case of the petitioner dated 31st March. As this was decided that the ruling dated 31st March 2017 passed by the AAR in the petitioner's own case is binding on the petitioner and the respondent. Case 2 of TVL MB Enterprises versus Assistant Commissioner ST reported in NTN 2024 volume 84 at page number 158. The order passed on the basis of so-called notice in which a specific date of hearing was not mentioned cannot be sustained. This case law established the principle of natural justice. No order can be passed on the basis of so-called notice in which the specific date of hearing was not mentioned. Dear professional friends, we see so many such orders passed by the authorities, so this case is relevant and critical for us to understand. In this case, SCN has not given any specific date for the petitioner to appear for a personal hearing. Thus, the petitioner has not participated in proceedings. The order is also not detailed order. This was observed by the court. Section 75 subsection 4 of GST Act deals with the general provision relating to determination of tax, and it is mentioned therein that an opportunity of hearing shall be granted where a request is received in writing from the person chargeable with the tax or penalty, or where any adverse decision is contemplated against such person. Therefore, the court is inclined, court quests the order and remitted the case back to the respondent to pass the appropriate order. Case 3. This case is again interesting because we are getting many orders passed by authorities without considering the replies submitted by the SSC. So in this case of TVL Chellam Mobiles versus Commissioner of Commercial Tax, reported in NTN 2024 volume 84 at page number 168, SSC order without consent, the assessment order without considering the reply submitted by petitioner cannot be legally sustainable. This case again established the principle of natural justice. The contention of the petitioner is that he has submitted relevant records specifically recording the sales for the financial year 2020-21. However, the respondent has not dealt with the said reply and also has not referred the document which the petitioner has filed along with the reply. In the said reply, the detail of sales has been specifically mentioned as rupees 50 lakh by the SSC. Therefore, the court opined that the respondent has not considered the reply of the petitioner along with the evidence submitted with his reply. Further, if the respondent need any further clarification, they ought to have directed the petitioner to clarify and submit further evidences for sales submitted by the petitioner. Without doing so, the respondent has mechanically passed an order. Therefore, the court set aside and quashed the order. Accordingly, the respondent was also directed to redo the same within a period of 4 weeks. The petitioner is at the liberty to submit further evidence document specifying he shall submit the backup detail for seeking exemptions. The petitioner also operate from the petitioner was also requested to cooperate for the assessment without asking further adjournment. Dear professional friends, I would also like to share with you, we find many orders by the authorities which says based on the reply submitted by the SSC, if any, which is very the case of which is the very basis of this decision made by Honorable High Court of Madras. Case 4. Case of Mahavir Shramik versus State of Bihar, reported in 2024 NTN volume 84 page number 149. The work granted to the petitioner has to be tested with the exemption granted by the CBIC. The question under this case was whether the assessing authority was legally justified in levying tax on the petitioner for the work of solid waste management simply because the petitioner did not respond to the notice issued under section 74 of GST Act. The contract awarded in this case, the contract awarded to the petitioner specifically indicate that the work involve collection and disposal of waste material from each household, shop and commercial center, as also sanitary work of drainage, road in the specific wards of the municipality. The work granted to the petitioner was to be tested with the exemption granted by the CBIC. A specific exemption granted by the CBIC. The tax levy has been proposed on the basis of deductions made by the Nagar Parishad under Income Tax Act, that is TDS deducted by under Income Tax Act. The SSC admittedly did not respond to the notice and order was passed demanding the tax under Bihar GST Act. The petitioner filed an appeal specifically pointing out notification number 12/2017 issued by the Government of India granting exemption from payment of tax in relation to a function entrusted to a municipality under the Article 243W of the Constitution of India. In this case, the work granted to the petitioner has to be tested with the exemptions granted by the CBIC. The court observed that looking at the circular dated 30th May 2018, the work carried out by the petitioner is exempt from the payment of tax under the BGST Act. In the above circumstances, the assessment order, the demand notice, and the order in appeal was set aside. The SSC petitioner directed to produce the detail of TDS by the municipality under Income Tax Act and provide the evidence of the consideration made by the municipality on which the TDS was effected under income tax. The SSC shall produce material in substance, and the assessing officer shall consider the same and pass order in accordance with the law, considering specific exemptions given for waste management. Case 5 of Simran Chandwani versus Principal Commissioner of CGST Delhi North, reported in NTN 2024 volume 84 at page number 115. This case has three issues relating to ITC. A. ITC, admissibility of ITC in case of wrong classification of goods in supplier's invoice. Whether the claim of ITC can be rejected simply because the supplier had mentioned the wrong classification of goods in his tax and invoice. It was held in the order that the adjudicating authority had not accepted the petitioner's contention while observing that the petitioner had obtained the declaration just to shelter the vicious thinking of to gain the cash refund. Court found that the aforesaid reasoning is based on more suspicion and surmises and not on the logical basis. There is no dispute that the petitioner was engaged in the manufacturing of footwear. The controversy relates to the 6 invoices issued by one of the supplier, that is Messrs. VK Polymer. Undisputedly, the said supplier has charged the GST at the rate of 18%, which is chargeable on PVC strap. There is no avail that the tax chargeable under footwear is 5% or 12% depending on the value of the said product. The supplies made by Messrs. VK Polymer under the 6 invoices in question were below the price of 1,000. Thus, if the said supplier had supplied a complete product, it would have charged GST at the rate of 5%. According to the petitioner had produced a certificate from the said supplier acknowledging that it had incorrectly classified the goods under HSN 6404 instead of HSN 6406. The fact that the GST has been charged by the said supplier at the correct rate, in our view, is a relevant material. The court held that the petitioner should not be denied the benefit of accumulated ITC in such cases. Second point involved in this case was denial of entire claim on the basis of irregularity only in some invoices. The appellate authority was not justified in denying the entire claim of ITC simply because there was some irregularities in 6 invoices issued by one supplier. Court was unable to accept the reasoning of the appellate authority to deny the entire claim on the basis of 6 invoices issued by one supplier. According to the learned counsel for the respondent, the petitioner's claim was denied solely for want of relevant documents. However, there is no dispute that the other suppliers had correctly classified the product supplied by them. Court did not appreciate this approach, while the concerned authorities have accepted the classification of product supplied by a singular supplier, Messrs. VK Polymer, under 6 invoices as correct. They have not accepted the classification of goods as far as the other suppliers are concerned. This is notwithstanding that there is no dispute that all suppliers have correctly charged the GST. The reasoning that the petitioner has produced a declaration with the mala fide objective of claiming the refund is not right. Third point under consideration in this case was refund of ITC. ITC claimed excess in some months and lesser in other months. The claim of refund was not rightly denied on the basis of excess claim of ITC in some and lesser in other months. The learned counsel for the petitioner submitted that although the ITC availed in October 20 and November 20 was in excess of the ITC that's reflected in GSTR 2A, the ITC reflected in GSTR 2A for December 20 would more than cover the same. The petitioner's contention is that this mismatch was on account of some of the suppliers filing the return on quarterly basis, whereas the petitioner accounted for the ITC on a monthly basis. The petitioner contends that if there is any excess of ITC availed in excess of the limit provided under the Rule 36 sub-Rule 4 of CGST Act, the petitioner may be liable to pay an interest, but the refund of ITC cannot be denied if there is an excess claim for the relevant period as defined under the Rules 88(4)(f) of CGST rules. The learned counsel also submitted that if Rule 36 sub-Rule 4 of CGST rules is to be implemented strictly, the petitioner's claim for the month of December 20 would have been higher. It is material to note that the learned counsel appearing for the respondent does not dispute that if the petitioner is correct, that the mismatch is only on account of suppliers filing the quarterly returns and petitioner would be entitled to the refund. He, however, stated that the petitioner did not submit the relevant document to establish this claim. The order dated 5th April 21 and 18th February 22 both were set aside. The matter remanded back to the adjudicating authority to consider the petitioner's claim regarding availing ITC and to pass a fresh order. Now friend, it's time to take up queries received during the week. During the week, we received one query, and that is if GTA is providing services to unregistered person, then who will be liable to pay tax? And our reply is that as per notification 32/2017 of 13th October 2017, if a GTA provides service to an unregistered person or unregistered casual taxpayer other than the entities like factory, body corporate, partnership firm or a society, etc., then it will be exempt. So according to me, this services, if not given to these entities, will be an exempt services and no one will be liable to pay tax. Now we are at the closure of this week's update, and we will be celebrating 75th Republic Day on 26th January this year. So from all of us, the team of NTN, Happy Republic Days to all. Be agile till next Friday. See you then. Bye bye.